From the SharePrices.com.au studios, I'm CJ Dore with another market insight. Well, we've had a bit of market flooding lately, and it's all about the flooding, Queensland and northern New South Wales. Now, has this had an effect on the market? Are people geographically or physically taken away from being able to trade? Or when they did, what did they go for? Did that affect the numbers? Well, let's break it down and have a look here. And we've got March trading activity, and we know there were 23 trading days in March, and it's an odd number, so we'll break it down as best we can and have a look at the equity trades, the amount that were actually executed. First 12 days of those 23, we had 9 of the 12 that had over 1 million trades executed. What about the last half? Well, that's the last 11 days, and there were just 4 days that had over 1 million executed. So things were on the downturn. Now, maybe is that due to the floods, less people trading or been able to trade, or maybe there was uncertainty around the country. People just weren't trading as much. But when they did, what did they go for? Let's see if we can have a look. And what we know is that the least equity trades were done on Friday, March 31st. Friday just gone. Worst day of the floods. SES all over the place helping people. Probably when most people around the country, on average, if you take out the Queenslanders and northern New South Welsh men and women, maybe that was an effect. Maybe that did play a part. And what we know is that for the first time in that month, it got down to the trades executed well under the 1 million, usually around 1 million, 1,000,001, about an average for the last few months, down here into the 830,000 range. First time out of that whole trading month, it was in the 800s. So volume was low for that day. Now let's see if we can break it down and have a look at where the money was actually spent in the market. Where did people trade? CBA, so the biggest of the big four banks and the biggest stock on the ASX 200. March, largest volume day was, look at that. Is that a surprise? Friday, March 31st, just gone, the worst day of the floods when it really peaked and literally houses were being washed away. Now, why is that? Is that an effect that people wanted to trade? Less trades happened, but when they did make up their mind and did trade, it seemed to all go to things like CBA, I just need some security. I want some financial future psychologically to know I'm going to get through this. Don't know how I'm going to get back on my feet or when, so maybe that played a part. Now let's go to the week and have a look at March. Largest trading volume week for CBA was week ending Friday, March 31st again. So is that a part when the rains kept happening for a couple of weeks and built up to last week, people wanted to be absolutely safe. I'm not going to do a lot of trading, but when I do, I'm going for something safe, and it has been since that Trump rally kicked off back in November last year. Let's have a look at the numbers for that week. Now, that was last week. We opened up 82.74 and closed just under 86. So good progress and a good result for people who maybe just wanted to put something in that little nest egg and be safe. So good safe stock, good result for CBA and the people who were investing. Let's have a look at Whitehaven Coal for that last trading week. And there it opened up at 2.75 and closed just under ticket $3. Now, why are we going and having a look at Westhaven Coal? Well, if people are going to be trading carefully, they want to go for something that is not a sure bet. You can't be absolutely guaranteed of that. But what we know is, of the ASX 200 stocks, Whitehaven is the best performer, upward green movement percentage-wise over the last 52 weeks to that date. So maybe a little bit of security there. If things are uncertain, I'm going for what I know has been winning for quite a long time. Now let's flip it and go to the other side. We're looking at Bellamy's this time. And let's have a look at this last week's worth of trade. They opened up here to start the week off at 466 and closed at 420, so they were down. Now, why are we looking at them? Unfortunately, they're on the other end of the scale. They're in the red. They're the worst performer, the less success they've had out of anyone else over that 52-week period to date. So maybe people stayed away from that or didn't want to borrow of that. Maybe floods played a part. People are going for something safe and secure. It just can't be with something that has been going down for such a long period of time, and people have been watching that. Now let's have a look at the ASX 200. We've got 12 sectors. Now one of the 12 sectors is down lower than when Trump elected. Everyone else has had a pretty good run, except this particular sector, and that is telco. Now who comes to mind when we talk about telco? It's going to be Telstra, the biggest of the big. Now there's some interesting numbers around Telstra. And let's have a look at January. They closed at $5. Now $5 is a very key figure for Telstra. And we'll have a look at the historical numbers in a minute. And they closed March at $4.66. February saw them go up and around and up and down over the $5 mark. But let's have a look here. And we know that Telstra didn't hit $5 in March at all. Let's move on and have a look at Telstra under $5. The first time way back in the day they slid through $5 on the way down was back in August 05. And it stayed under $5 until May 2013. That is a very long time. Now what we know is that October 2016 last year is the first time that it went down again. Now how long is it going to stay under? Maybe it's stocks like Telstra that are pulling things down, and where people maybe are trading less, or if they do, they're going to go for something a little bit more certain. What we know is it is such a widely held stock, it could be the thing that is putting a bit of a full stop, a bit of an anchor just on the market and holding things from getting up to that 6,000. So a lot of things to take into consideration, the volume and the numbers and the trades during that flood period, but also here's a stock that could be playing a part that just froze things a little and people are a little bit unsure. So a combination of all those potential factors. So there we go, another market insight. Hope you enjoyed that one. From the SharePrices.com.au studios, I'm CJ Dore. Happy trading. Thanks for watching.